Good evening, ladies and gentlemen. Eric Mashinsky. I wanted to just put out, hopefully this will be pretty brief. I think that it will, that's the intention. But um, it's a little bit of a unique, I guess, urge that I had to put this out there. The fact is that, you know, I became a stockbroker dropping out of undergrad at the age of 20. I was a licensed broker before my 21st birthday. And even prior to then, even though my family had no money, didn't have any investments whatsoever, when I had bumped into a stock market game that we were doing in an econ class my senior year of high school, where they gave us, excuse me, a mock $100,000 amount. It's funny because my niece is actually doing this now, and I shared with her some picks through the end of the year. A couple of the gold ones, you know, they're iffy, but the big winners have been like Coinbase and another one that could put her in. We'll see what she gets if she's in the top whatever in the state of Wisconsin. But ever since then, you know, I have been fascinated by capital markets, particularly equities and the stock market. I've always viewed it as my way out of, you know, I guess you would call it a place where a lot of people get trapped, you know, and stay inside of, you can call it a comfort zone, but more of a trap, you know, a jail, if you will. And I've taken massive risks in my life, you know, younger and older, frankly. And you know, I can say unequivocally, I've been a blessed man, and I'm uh, very happy and grateful for the success that I've had. But it hasn't been without massive amounts of pain, suffering, um, you know, wrong moves, losing money, not having money to invest at the ideal time, the frustrations of going through cycles that I, you know, maybe bet either wrongly on or misjudged. I've never, you know, I've only had in my life as an adult a job where I was getting a salaried position for 7 months out of my life. That was when I was 28 and worked for a consortium at McDonald Investments, a boutique firm owned by KeyBank Capital Markets in Chicago. And it was a 7 month deal. I don't know why it wasn't 6 or 9 or 12, but I remember the 7. And I had like a $3,000 a month base and then these incentives on top of that. Besides that, I have worked on an eat what you kill model ever since I was young. And so my education in the markets has been there was a saying that it was like, you know, the markets themselves are a great teacher, but the cost of the education is very expensive. I think that is true. You know, there's a certain level of times that it took me, maybe too many, you know, or I could have reduced it, where I had to go to the woodshed and just get disciplined into making better decisions. What I can tell you today, this is what I wanted to share with you because I feel like I have really good news. I have great news for gold investors. I have wonderful news for gold mining stocks, silver mining stock, junior mining stock investors. We are a niche market, guys. This is a very small piece of the pie. You put all of the gold companies that are public together, and I believe the example that was given to me recently, it doesn't even add up to the market cap of IBM. I don't know if that's exactly true, but it's probably very much in the ballpark. This is a niche area that is generally dismissed or hated by generalist investors that are involved in many other different arenas in the markets, but not in mining. And frankly, I would say I've been involved in two of the worst businesses that I can think of on planet Earth. One is the movie business, which I've never done. I've never gotten anything back out of what I've put into to that business. I learned that lesson a long time ago, but and then there's the mining business, and it's the exploration mining business in particular that is just it's a very uphill, battle and mountain to climb. You're literally raising money to chase after something that could be, might be, should be, turning into a mine to pull out something out of the earth after you've invested decades usually and tens or hundreds of millions of dollars. You've got to rely on this faith model, which is really what it is. It's a faith model. I think that's why I do well in it, because at times like right now, the reason I'm doing this video is because I know what's right around the corner, like right around the corner, like 30, 60 days around the corner, 90 days around the corner type of thing as we go into a new year. And we're in the dearth, the absolute capitulation period in this sector that has been going down in a trend, strong downtrend for over 3 years. And it's very easy to get lost in the pessimism. It's very easy to kind of give up hope and to, if you don't have a lot of cash or you don't have, investment or income coming in, it can be very frustrating. And what I am seeing and what I am hearing from many different tentacles, within the investment landscape, the mining landscape, et cetera, I don't know that it's ever been this bad since I've been in this industry, as it has been the last, few months. The valuations on these things, these are times that are just not going to last much longer at all. Okay. They're about to turn. They're about to turn in probably a bigger way than I'm willing to try to talk about today, because I'm not trying to hype you up or anything. I'm just telling you what I believe firmly and I can see. When I can see things and I have it in my gut as a conviction and I gather this much intelligence and information, guess what? 9 times out of 10, it's on and I make money right then when I see the storm coming together in a way that it has already now. We're in the very beginning of a new bull market in the mining sector, in gold, and soon to be in a lot of commodities. But I think gold and silver are actually going to lead the way into 2024. Gold will carry the commodity sector as a precious metal of choice, and silver will follow. And then you're going to get some of the secondary plays in commodities that will be lifted because of gold. People don't think there's a correlation. I do. I think there's some correlation there. If gold is strong, usually a lot of other metals will follow. And we are at a point, even technically, where this market is about to blow. We could see gold consolidate. I said this on Real Vision recently. We could see it consolidate and keep testing this 2050, 2100 area, 22,000 area, and then get knocked down. It could happen and still base for another year. It's possible, but it's not likely. It's highly unlikely. Gold is about to burst. It's about to burst through 2100. And when we get that signal, I'm telling you, you want to pile, virtually every last liquid penny that you have into your favorite mining stocks. It doesn't have to be the tiny penny juniors. It could be, those that are a little further along that are going to get an immediate bump in their earnings and their numbers. But I decided, this year, I have been accumulating these junior tiny miners because in a normal environment, when you think about, let's talk about really quickly, one that comes to mind, Giga Metals, is nickel, right? But, and it's below the level that they did their PEA and PFS at, where you have, I believe, a net present value at a 5% discount over $400 million when nickel was $10. When nickel was just $10, $11, $12, A Giga Metals has been trading in the $20 million range, give or take 5 million bucks or something. That's 5% of NPV. In a normal world, companies are going to be bought out with any momentum in a normalized time for at least 1 time, 2 times NPV, maybe up to, I've seen these things happen where there's 7, 8, 9, 10 times net present value on projects that have been developed to a late stage in very many different metals and mining companies. We have been lulled into thinking that this, I talk about it a lot, which is recency bias. We believe in our head, that it's just an automatic, I think, subconscious thing that whatever has been happening recently is going to continue to happen in the near future. That's not the case here. I'm just sharing this with you tonight because I see not only hope, but I have confidence and faith that we're going to be in a whole new environment. And looking back on this time, call it the last 6 months of 2023, it's going to be like the woulda, coulda, shoulda World Series in about 1 to 2 years. It will be the biggest woulda, coulda, shoulda hyperbole that we've ever heard from everybody we know in the space. I could have bought this at that price all day long. Could have bought this stock for, $2 an ounce in the ground, $3 an ounce in the ground. There's companies that are trading with reserves for like less than $5 an ounce on the ground. Not even like we're talking, not even a resource anymore. These are reserves. These are late stage projects that are massive. And so I just wanted to put this video out as a check-in with you that this is not going to last. My purpose of doing the video is to give you guys some hope that things are going to change. And I sense that they're going to change very swiftly because the tax loss selling coupled with the long bear cycle where things have already been beaten down, it's exacerbating the situation. It has been, and there's no buyers. The buyers are gone. Now we're starting to see some buying come into certain issuers. And what is happening is the amount of move, it is going to be very difficult to build any sizable positions, just here and above, like I'm talking 50, 100% pricing on a lot of the smaller juniors. It's going to be very difficult once they go up 50, 100% to really buy into a large position because there's going to be a ton of competition for it. And there's no stock to go around because those of us that have stuck through this, I'm not going to start, peeling off my positions on the first sign of a bounce. I'm in this for a fucking grand slam home run. And I'm not going to give anybody my paper in general in a lot of these positions until time goes by and we get people squeezed to pay us massive amounts of money for these assets that are so difficult to identify, finance, develop, and just keep working on with your head down from company to change company to company to company. Some of these discoveries were made in the 70s and the 80s and even before that had been developed all this time. One company puts in 10 million, they go bankrupt. Another puts in 100 million, they go bankrupt. They change their name, they spin it out, they do this, they do that. We are at a point, guys, where there's an inflection point. I'm just letting you know. I could be wrong, but I think the inflection point is right now. The tax selling is going to dry up in the next couple of weeks. Things are going to start floating higher on very low volume. And going into the end of the year, definitely, I think in January, or maybe it takes until sometime in February, I doubt it, we're going to see doubles and triples off the lows of the tiny junior gold companies, silver companies, mining stocks in general, but gold and silver in particular are moving into a bull cycle that is going to lift and drive earnings and profits, which is the bottom line of what ends up driving these stocks. And you should get ready for it because it's coming. Don't lose hope or faith. reset. Cheers.